eso recibimos hasta ahora a Stefan Hofrichter, director de Economía y Estrategia Global de Allianz Global Investors. Stefan, good morning.
Good morning.
Thank you for joining. Good day. Thank you for joining us on Negocios Television. Given economic conditions and recent events worldwide, how to evaluate?
Well, as of today, it still looks that the US is doing well in terms of economic growth. We question that this will last for a long period of time. Actually, we take a view that is against the consensus, that the US is likely to head into a recession in the course of next year. Europe, anyway, is showing some signs of weakness already. That's notably true for Germany, which probably is already in recession. Things look slightly different in Asia, where China, despite structural headwinds stemming from the weakness in the housing market, is showing some signs of growth stabilization, probably even some reacceleration cyclically. And likewise, Japan continues to do reasonably well. So overall, a mixed view, but for the developed Western world, we have explicitly a more cautious outlook on the for growth than consensus.
Mm-hmm. Stefan, do you think the Fed is adopting an appropriate strategy to balance economic growth and inflation?
Yes, we think so. Well, they have hiked rates to tight territory, we think. And they have announced, and we totally share that view, that they will have to keep at it. So easing at this moment, I think, would be premature, because the central bank cannot be sure that the inflationary pressure is behind us. For sure, we had some good inflation prints a few days ago, but underlying inflation remains still too high given the 2% target. So high rates for longer is what we expect going forwards.
How do you see the relationship between the Fed's goals for inflation and employment, and how could it influence future decisions?
Well, there are two goals, as you rightly say. It's inflation and also support for economy. But we should be cognizant of the fact that if we have too high inflation, that this is bad for growth medium term. So there might be a short-term trade-off, but medium term there isn't. So addressing inflation is a way of achieving the long-term goal of stable growth and a healthy labor market. So down the road, I think the two goals are complementary. They are not in conflict with each other.
Mm-hmm. The ECB has maintained negative interest rates as a measure to stimulate the economy. How do you think this is affecting you?
Well, rates will, for the time being, rates are remain higher for longer, we think, and that certainly has some implications for markets. Now, from a bond perspective, we think that bonds still offer opportunities as we are heading into the slowdown. So it's a question of by how much yields might fall. We think, nevertheless, that bonds are starting to become attractive. For growth, if we see a rate cut in the course of next year, which is likely, just not by as much as the market is currently pricing in, then at one point in time, there will be a good entry point again for risky assets. But probably for the time being, we are still in a slightly wait-and-see position.
Mm-hmm. And do you see any particular opportunities or risks in the Eurozone financial markets?
Well, of course. Well, as I said, growth here is already on the weak side. Germany probably already in recession, and that means some headwinds for earnings. So in that respect, we definitely have a preference for US as well as Japanese. We haven't talked about that in detail. Stocks relative to Europe. in general, I think there will be a good entry point for European equities in the course of next year. But as of now, probably too early to really load up on European equities. But from a longer term perspective, clearly one of our preferred regions.
Mm-hmm. Okay, so Stefan Hofrichter, Director de Economía y Estrategia Global de Allianz Global Investors, thank you for this time. Good day and good business.
Thank you for having me. Thank you. Bye-bye.
Bye.